BLOCKTV, where it is time for chain breakers and the people who advance the sphere forward. And today, the brain, and some would argue the soul of Cred, Dan Schatt, prior to co-founding Cred and the Universal Protocol Alliance. Dan himself was also a PayPal general manager of financial innovations and published a book on electronic payments, mobile commerce, and virtual banking. He's been in this for a long time. And before anything else, I just want to thank you, Dan, for being with us today from San Francisco.
Thanks so much for having me. Really appreciate it.
Lovely to have you with us. I want to say before we start, I read a little bit about you, and I think it's always a pleasure, and this is me actually giving you a compliment, to speak to somebody who gave part of his life to the Peace Corps. There you go, something you didn't know about Dan. So, before anything else, as we mentioned, I want to touch on something that's very fascinating to us, and that's the Universal Protocol token. First of all, the listing, how did that go?
It's just happening right now as we speak. So yeah, we're very excited. Cred, Uphold, Certic, Omisa Go, Bittrex Global, we've all banded together to build the infrastructure that we think is needed for the next billion users of crypto and blockchain. And that is creating an interoperable a way of basically working across blockchain operating systems and creating a much better, more transparent stablecoin set of stablecoins that are out there. So we've just the utility token that connects all of the various Universal Protocol assets is the UPT, and we've just listed it on Bitcoin.com exchange, there seems to be some real interest in our project. We're working quite a bit with legislators, with merchants, with various companies across the U.S. to allow people to basically leverage this project.
To leverage this project. First of all, terribly exciting that we're doing this at the time of the listing. I'm going to ask you exactly how well it's doing in a couple of minutes. But when you say we're working with legislators, needless to say, you're in San Francisco. Legislation when it comes to both crypto and the whole notion of it, some would argue, is a bit far behind in the United States. What are you working on with legislators?
Yeah, well, thankfully, we are in California, which is one of the most progressive states as it relates to crypto. But one of the things that we've observed with local politicians here is there are a lot of cash-intensive businesses out there that have high crime rates. Cost of cash is incredibly high. One, for example, is cannabis. Cannabis is legal in California, yet it's like conducting commerce like 2,000 years ago. You walk in, you go to an ATM machine, you take out cash, you hand it to a merchant. So we recently announced that the first local politician, a Berkeley city councilman named Ben Bartlett, was the first to actually pay for cannabis, leveraging the financial operating system built by Cred. And ultimately what the merchant and the tax collector got was a stablecoin produced by the Alliance. What's so unique and interesting about this, and why politicians like it, is tax collection happens instantly and it happens per transaction. Allows city officials to be able to forecast their tax revenue, today they only collect about 14% of the tax revenue in these sectors. $2 billion business just in California alone. We're seeing many sectors that need the same thing. So stablecoins are really solving a big problem here for politicians. And now at the state level, there's a bill introduced in January that will allow California to accept taxes in the form of stablecoins.
First of all, God bless California entirely. And granted, this is happening on the state level. We've seen that also in places like Wyoming, again, making strides internally on the state level. Hopefully that will go nationally as well. Now, I want to talk to you because I find it fascinating, the Universal Protocol Alliance. First of all, how did it come about, and why did you guys join?
Well, this was at a time when we observed that stablecoins were first coming out, and our belief that is that it'll take a few years, but gradually the way that most of the world will see money is a dollar will just be a dollar in crypto form. It'll just be a better version of a dollar. A euro will just be a better euro, and the technology itself, whether it's called ERC20 or something else, will fade behind the scenes. And so, we've operated with first of all, we saw that there was a need for a more transparent, substantiated set of stablecoins where anyone could self-audit and see in real time. Yes, indeed, it is backed one-to-one with a dollar, with a euro, etc. We saw the need for blockchain interoperability, so we've started with building everything on Ethereum, the most predominant smart contract platform out there. We could move to other operating systems if we see development here. But the idea is that we're taking any asset, really, could be fiat, could be stock, could be Apple stock. And we are basically turning it into effectively an Ethereum token backed one-to-one with the underlying asset, and then allowing those Ethereum tokens to be borrowed, lent, exchanged, saved, allow people to earn interest on them, et cetera. So this really drives, it drives to the heart of sort of a fundamental challenge that the crypto industry has, which is there are no practical use cases, right? It's hard to really get a handle on what's real and how is it affecting someone day to day in their life. Well, now if they can earn 10% on a dollar that truly is just like a fiat dollar, merchants accept it. They can use it for exchanging, borrowing, lending, trading, et cetera. That becomes hugely valuable, and that's what we're doing. So we saw the need for interoperability, mainstream safeguards. We think we're somewhere on a continuum right now between sort of a centralized world, PayPal, where I came from, very centralized place, to a fully decentralized. But you need custodians somewhere in the middle. The technology is evolving, and that's what we're sort of on the cusp on, this continuum, moving things over to a more decentralized fashion, more transparency, where everyone can participate. A much more inclusive set of crypto assets.
No, entirely. And dare I say, let me say this, because when I read about the alliance and what the members are doing and all of this, that sounds almost like a much better version of the idea of Libra. And I'm wondering of Libra.
Of Libra.
Yeah, and because at the end of the day, when you say that you foresee a future where most places, most nations will have a digital coin, you're doing something very important in the United States. Would you say there's an understanding there also that this is what's coming?
You have to sort of, if you look at the history and you see that, basically in the 1700s, 1800s, a lot of governments developed a gold standard, then they created sort of paper fiat. They linked the two together to drive confidence, instill confidence. Hey, you can take this paper, it's backed by gold. In a sense, we've now arrived, and then eventually that standard was cut, with Bretton Woods back in the early 70s. Now what we're seeing and what we believe is that, in the beginning, people are going to get comfortable with the idea of a crypto dollar as long as they can know for sure that it's backed one-to-one with an actual dollar. And, backing something with a whole basket, I think, of fiat currencies is something that Libra has been working on, which I think is challenging for any one government to really get their arms around. But we think when we're focused on, a fully substantiated, let's say, dollar or euro or yen, that's really impactful. That's really practical. Merchants need it. Governments need it. It's not so complicated to understand. It's just another form factor, of money that is even easier to store, save, and exchange. And that's what we're doing. So we definitely think that the world is moving towards this sort of stablecoin concept. Now, at some point in the future, there might be eventually an interest in getting off that sort of backing one-to-one with a government fiat currency. But for now, we think that's what's going to drive the market. That's what's going to bring the next billion people into this industry.
Entirely fascinating. Now, how do you believe that the Alliance can, according to your statement, and I'm quoting you, provide blockchain interoperability, mainstream consumer safeguards, and practical applications for blockchains that reduce time, effort, and cost for businesses and consumers as well as local governments? Sounds fascinating. Talk to me on how this is going to happen, though.
Yeah, well, probably it's a mouthful. Probably easiest to give you a few very, very practical examples today. So, if you want to switch, if you hold gold or euros or yen and you want to move them sort of seamlessly and somewhat frictionlessly without a lot of cost, move between a dollar and a euro and Apple stock, frankly. That's very, very challenging today. There are a lot of frictions in the process. If everything is ultimately on one operating system, it becomes much easier. So we've bet on Ethereum for now. So you can take this Ethereum-based dollar and instantly exchange it for an Ethereum-based euro. Sure. And then if you want to take that Ethereum-based euro and exchange it for real euros, we can instantly enable that too with a lot of the reserve management technology we built at the Alliance. Now, how this becomes really practical in the business sense with merchants is, if you look even today at companies like Square, it still takes a few days for a merchant that is accepting, let's say, a credit card or debit card to actually get the money in their bank account. And that's challenging, right? Because the number one challenge facing all businesses really is cash flow. In addition, tax collectors generally don't get their taxes very often. And when we then go into the cash realm, upwards of 12% of sales that are cash-based ultimately are a friction, a cost in terms of armored car services that you need and in terms of theft, et cetera. So what we proposed with these stable coins is that merchants can instantly be advanced stable coin. They don't have to wait 2 or 3 days like they normally do. In addition, they can easily use those stable coins to work across their supply chains, pay their suppliers, which normally takes a lot of time and energy. They can always move these stable coins back into the underlying fiat if they want to, but we believe that over time, there'll be less and less of a need to. If you can earn interest, if you can pay your suppliers, if you can pay your employees, that's terrific. Now, the key to this is not changing consumer behavior. It's not like everyone's going to walk up to a point of sale terminal and open up their wallet and pay with Bitcoin or Bitcoin Cash.
Exactly.
We think people will swipe their credit cards, right, like they are now, or just have it in their wallet, have it in their Android wallet, and tap or use a barcode, just like they do with the Starbucks app. So what we've done is we are that great translating layer. We'll take it, we'll basically allow for instantly the purchase of crypto, and then that crypto will be collateralized and stable coins advanced to the merchant. This is all happening in real time. And so we can take a normal fiat payment and ultimately it gets translated into crypto sitting in a merchant's account, sitting in a tax collector's account in real time. And that's the power of blockchain and being able to move things through blockchain. And the ledger allows, cities and merchants to be able to easily account for everything that they're doing.
Entirely. And look, and Dan, it does sound that that is the right way of thinking. Some would argue. That said, many times we've been compared, the sphere, so to speak, with the world of blockchain, to the first days of the internet. And it's in that respect, many different technology platforms, fragmented, incapable of communicating. Needless to say, posing a problem at this point. How can the Universal Protocol platform solve that in that respect, and how do you get everybody on board?
Yeah, well, the start of this is just simply recognizing that you may not even realize you're using UPT. If the next time you want to get the very best interest rate on your dollars and your euros, and more exchanges and wallets simply offer you the ability to hold them in the form of a crypto dollar, crypto euro, and it's insured. It's you can see in real time that it is fully backed. I think the idea here is that you have to give all the right reasons and incentives for someone to do what they would naturally do, which is people want to make their money work smarter and harder for them. It can work smarter by simply cutting out a lot of the fat today that's in the traditional banking system when it comes to the legacy branch infrastructure that's out there, the legacy payments infrastructure that's out there. You know, banks today, you're lucky if you can earn 1%. Usually it's half of 1%. In Europe, it's negative interest rates. And on the other side, when you're borrowing and they're giving you a credit card, they're charging you 24%, right? So you've got like a 23.5% spread that banks make. What blockchain and the power of the universal protocol platform enables is basically everyone to get a better deal. Those spreads can come down significantly because they're not caught up in this legacy infrastructure. Instead, they go back to the customer. So you're talking about earning, you know, upwards of 10% on all of these various universal stable coins, you know, versus 0.5%. And it sounds crazy like a Bernie Madoff scheme, but the reality is that you can really give back a lot if you're creating these efficiencies. And we saw it directly. That our team basically is legacy PayPal. You know, we started with making it easier to send money via an email address. And the aha moment for me when Bitcoin came, and I realized in 2013 this was going to hit PayPal hard someday, was that you can't compete with an open ledger when it comes to having a centralized database. We're talking about every node. Anyone now has access to Bitcoin. If they have access to Bitcoin, they can have access to these various universal stablecoins. So increasingly, we're going to see them listed on a number of exchanges. We've got wallets that are integrating this technology. And it'll just be something that we believe is happening naturally because it's just a better deal than everyone gets.
And that's the thing, it's a better deal. One of the things that we struggle with in the sphere, and you mentioned cannabis, and you pinpointed the 2 billion California cannabis industry. You know, luckily for the United States, some states have legalized cannabis, which, you know, needless to say, medicinal benefits, whatnot. But California is one state of some, but not all. And to me, it's almost like the, you know, the metaphor of the sphere and what it can do for banking, what it can do for almost everything. It's yet convincing the masses. When do you see them coming along? Because clearly you're sitting in California. It's easier to, you know, to pass through and legislate there and put the good folks of California on the right map. How do we do it with the rest of America and the rest of the world?
Well, you know, it's interesting. I mean, we're seeing sort of the same thing play out that played out 20 years ago, you know, 30 years ago with the internet boom, which is a lot of the work, you know, came out of California. A lot of the progressive legislation came out of California. You know, so, you know, in California alone, we've got a $2 billion formal cannabis market, and you've got probably a $6-7 billion informal market across the country. It's a $20 billion legal market now. So, but you know what's interesting here is generally, you know, you think about PayPal early on. PayPal was solving some of the issues associated with online gambling before it went mainstream. It's always sort of those cutting edge. You know, industries that have just become legalized in some way that are looking for those innovations. And it's the same thing here, but it doesn't apply just to cannabis. The fact that we've solved something for cash-intensive merchants in the cannabis business, the reality here is this is a solution that is simply better than Square, better than a lot of companies, because if you're tied to the legacy payments infrastructure, you're never going to be able to settle you know, settle these sorts of money movements in real time. You're never going to be able to offer the same returns. You're never going to be able to give single-digit interest rates for borrowing and double-digit interest rates for earning. That sounds like an upside-down equation in mainstream finance, but you can make it work when you move everything to the blockchain. It's similar, I would say, to what Elon Musk has done with Tesla. He started with a clean sheet of paper. Let's not try to retrofit electric motor into a combustible engine. Let's start with a clean sheet of paper and reinvent how financial services, banking services can be. And that's what we've done, and that's what we're doing.
Amen to that. Needless to say, you've got the background, to lead this. Wonder, just because you are of PayPal in the past, I'm a general manager of their financial innovations. Did it surprise you that PayPal dropped out of the so-called, the company that was the company of Libra?
There's so much political pressure right now, I think, on every member of Libra. If you saw some of the notes that came from the Senate, I think, look, at the end of the day, PayPal is very beholden to the U.S. regulatory infrastructure and regulatory regime, and stands to lose a lot of money if you go against those regulators or trying to really push in a big way. It doesn't surprise me, and I think that it's great that they're trying to push the envelope. I think most people underestimated how much Facebook is distrusted and disliked. As a sort of a leader of a centralized database with everyone's information going out to sort of promote the cause of decentralized finance, I think is a real challenge.
A disconnect there.
I think
Now, UPT, I just want to talk about this a little bit more. I'm not releasing you yet, but the Universal Protocol token, as we said, listed today, doing very well. How well? Come on. Give me a bit of detail.
I haven't looked at it yet, but it's gone out at 1 cent. So we'll see how it does. There will only be 10 billion tokens ever minted, but 82.5% of all tokens are locked up for 3 years or longer, with a standard vesting schedule here. All of the alliance members, all of the major stakeholders are committed to seeing this through. This is a multi-year project. And I will say with UPT itself, this utility token that sort of connects with the project and everything else we're doing, there is already a lot of utility associated with it. Each member of the alliance is offering something interesting. In the case of Uphold, it's rolling out a debit card. You can basically earn cash back with your UPT. You can stake your UPT for better, lower commissions on Uphold. You can earn and borrow against it with Cred. You can pay for your gas fees with the layer 2 technology with Music Go. If you're doing code auditing, you get discounts with Certic, the #1 code auditor. So, we find that this coalition approach of building to this utility and sort of this open ecosystem that we're building is a much better way to do it than sort of closed, proprietary. Everyone needs to put in $10 million, et cetera. It's a very different sort of coalition building approach.
I couldn't have said it better.
Than a traditional tech legacy payment approach.
Entirely. And Dan, just one more thing. First of all, Cred clearly making strides, definitely in the right direction. What's next for you guys?
Yeah, well, thanks for asking. Cred is gone. Started in 2018, is already profitable today, operating in 183 countries around the world. Has secured over $300 million of lending capital. And is offering probably some of the best rates out there with over 30 different currencies today, from fiat to crypto. You can earn and you can borrow. The next big step here is that you're going to see a lot more of Cred at the physical point of sale. We've got the expertise and the backing to be able to build a financial operating system that can really help merchants, give them lines of credit, give them a way to lend their own money and earn interest, and ultimately, get much quicker transactions in place. So you'll see a lot more of Cred in the commerce realm, which is what overall financial services is at the end of the day: capital markets, lending, borrowing, and commerce. And that's what Cred does.
The new world. Dan Schatt, CEO, as I said, the brain, the soul of Cred. I cannot thank you enough for joining us today from the lovely, wonderful state of California. Thank you so much for being with us. We were BLOCKTV. We'll be right back.
For more news and updates, follow us on Twitter.